welcome to the 130th MPC Press Briefing, following the conclusion of the meetings by the committee. So as we always do it, we'll listen to the Governor, Dr. Johnson Pandit Esiama. Give us a briefing on the position of the committee. Thank you.
Thank you very much. So the Monetary Policy Committee held its 130th regular meetings from the 18th to 20th May 2026 to, as usual, review recent economic developments and assess risks to the outlook for inflation and growth. This statement summarizes the key discussions and the committee's decision on the monetary policy rate. Since March 2026, global economic conditions have been shaped by the ongoing geopolitical tensions in the Middle East. The conflict has disrupted maritime and air traffic. It has increased energy prices and heightened policy uncertainty. Against this backdrop, the IMF has revised down its 2026 global growth projection to 3.1% from an initial estimate of 3.3%. The IMF also noted that further downward revisions are likely if the conflict is prolonged. The disruption to trade flows following the blockade of the Strait of Hormuz has led to a sharp increase in international crude oil prices and reignited inflationary pressures in both advanced and emerging market economies. Early indicators suggest that global headline inflation is beginning to accelerate, and this is fueled by higher energy and food prices and rising inflation expectations. The expected resurgence in inflation may prompt central banks to raise policy rates, which could push long-term bond yields higher, tighten global financing conditions, and reverse portfolio flows to emerging markets and developing economies. Domestically, economic activity strengthened in the first quarter of 2026. The Composite Index of Economic Activity, or the CIEA, which tracks the bank's high-frequency indicators of real sector activity, this expanded by 12.6% year-on-year in March 2026, and this was up from 2.3% in March 2025. The main drivers of the growth in the index were credit to the private sector, consumption, industrial production, and international trade activities. The latest surveys conducted in April 2026, however, indicated that both consumer and business confidence, though high, have softened compared with the February survey results. This was largely due to concerns about the domestic implications of the ongoing Middle East conflict. Similarly, Ghana's Purchasing Managers Index declined to 50.3% in April 2026 from 51.4% in March 2026, mainly reflecting higher input costs. Headline inflation inched up marginally to 3.4% in April 2026 from 3.2% in March, marking the first increase since December 2024. This uptick was driven by non-food inflation, which increased to 4.2% in April 2026 from 3.9% in the preceding month, and this was largely on account of base effects. Core inflation, which excludes energy and utility items, declined, indicating that underlying inflationary pressures continued to ease. However, inflation expectations among consumers, businesses, and the financial sector, these edged up marginally, but remained broadly anchored within the medium-term inflation target band. Growth in monetary aggregates moderated further in April 2026, and this too was largely reflecting the tight monetary policy stance. Reserve money growth slowed significantly to 3.6% in April 2026, compared to 38% growth a year earlier. Similarly, broad money supply expanded at a slower pace by 22.2%, down from 26.7% over the same period. On the money market, interest rates on short-term instruments declined further, reflecting easing inflation expectations and the monetary policy stance. Yields on the benchmark 91-day Treasury bill fell to 4.9% in April 2026 from 15.5% a year earlier. Similarly, the Ghana reference rate eased to 10.06% in April 2026 compared to 23.99% a year earlier. Also, average bank lending rates declined to 16.3% from 27.4%. In line with this, private sector credit rebounded strongly in April, up by 28.7% in nominal terms, compared with a 19.9% growth in April 2025. In real terms, this represents a growth of 24.5% compared to a contraction of 1.1% over the same comparative period. Now, provisional data show that fiscal performance for January to March 2026 reflected strong expenditure containment measures amid revenue shortfalls. On commitment basis, the fiscal balance recorded a surplus of 0.1% of GDP against the target deficit of 1.2%. The primary balance also recorded a surplus of 1.2% of GDP against a surplus target of 0.2%. The public debt stock of central government and guaranteed debt, these also rose to 674.1 billion Ghana cedis, constituting 42.2% of GDP at end February 2026 from 641.1 billion Ghana cedis, which constituted 44.7% of GDP at end December 2025. Now, the banking sector performance improved significantly. Total assets expanded by 26.6% year on year to 493.9 billion Ghana cedis in April 2026, supported by deposits, domestic borrowings, and shareholders' funds. Asset growth was largely driven by investments, which rose sharply by 52.6% in April 2026 relative to 27.8% in the same period last year. Credit growth also rebounded as financial intermediation improved. The banking sector's solvency position strengthened alongside improvements in asset quality. The capital adequacy ratio increased to 22.3% in April 2026 compared with 17.5% a year earlier. And the non-performing loan or NPL ratio also declined to 18% from 23.6% over the same comparative period. And this reflected a rebound in bank credits and reduction in the stock of NPLs. Nonetheless, elevated credit risk remains a key concern and requires banks strict adherence to the regulatory guidelines aimed at reducing non-performing loans in the industry. The external sector remained resilient despite the early impact of heightened geopolitical tensions, which temporarily slowed gold export shipments in March and April 2026. In the first quarter of 2026, the current account surplus improved to $3.1 billion from $2.43 billion in the same period in 2025. This was primarily driven by robust gold and cocoa export earnings alongside stable remittance inflows despite the rise in payments for services and investment income. Gross international reserves increased to $14.4 billion as at May 18, 2026, equivalent to 5.7 months of imports cover for goods and services, up from $13.8 billion in December 2025. Reserve accumulation continued to provide buffers to the foreign exchange market. And in the interbank market, the cedi depreciated by 8.4% against the US dollar in the year to May 15, 2026. And this was largely due to demand from the energy sector and dividend payments by some corporate entities. In taking the policy decision, The committee therefore acknowledged that ongoing geopolitical tensions in the Middle East have broadly weakened the global growth outlook. It has stoked inflationary concerns and has also heightened policy uncertainty, with potential implications to the domestic economy through the trade and financial channels. The data showed that although inflation had started rising in advanced economies, the spillovers to the domestic economy through the trade channel remained muted. The committee also noted that the domestic economy continues to recover, as evidenced by the strong outturn in the CIEA during the first quarter. Growth is projected to remain strong, supported by an expansion in private sector credit. However, commodity price volatility and supply chain disruptions could pose downward risk to growth. Regarding price dynamics, inflation remained well below the lower limit of the medium-term target band. Although headline inflation and expectations indicators picked up marginally, core inflation declined, indicating continued easing of underlying inflationary pressures. The latest forecast suggested that inflation is expected to trend upward into the medium-term target band, largely due to base drift effects related to exchange rate movements, food supply conditions, and transport fares. Upside risks to the inflation outlook included the protracted Middle East crisis, which could keep crude oil prices above $100 per barrel and raise the prospect of petroleum price pass-through into domestic transport and utility costs. The quarterly adjustment mechanism for utility tariffs could exert upward pressure on non-food inflation in the coming months. But however, relative exchange rate stability, increasing reserve buffers, and continued fiscal discipline are expected to help moderate these upside risks. Based on the above considerations, the committee assessed risks in the outlook to inflation and growth as broadly balanced and decided to maintain the monetary policy rate at 14.0%. The committee will continue to monitor incoming data, in particular relating to potential spillover of the geopolitical tensions to the domestic economy, and take appropriate policy actions when necessary. The committee took yet an additional measure. The committee decided to amend the dynamic cash reserve ratio to a uniform ratio of 20%, maintained in the domestic currency effective June 4, 2026. The next Monetary Policy Committee meeting is scheduled for July 20 to 22, 2026, and that meeting will also conclude on July 22nd, 2026, with the announcement of the policy decision. I thank you for your attention.
Thank you very much, Governor Dr. Johnson Pandit Esiama. If you've just joined us, this is the 130th MPC Press Briefing, led by Governor Dr. Johnson Esiama. We are also live on Joy News, Channel 1, GNA, Northern Report, and BNFT. Here with the Governor is also members of the Monetary Policy Committee. So members of the media, as we always do it, we'll take some rounds of questions, and for clarity and also to ensure that the questions are well answered, please give us one question at a time and straight to the point. Keep the narratives very, very short. Thank you.
Good afternoon, Thomas.
My name is Tomac Berry from Corporate Guardian Magazine. Over the past fortnight or so, we've realized that Treasury bill issuances have resumed oversubscription after several weeks of undersubscription. Now, what has caused this change? Specifically, I want to ask, has the bank's issuances of Bank of Ghana bills changed in terms of your open market operations that's given the banks more liquidity to invest in treasury bills? Or are there some other factors we don't know about which have now caused the reversal from under subscription to over subscription over the past fortnight?
Thank you.
Hello. Yeah, good afternoon. My name is Joshua Wolasi Amlanu with the Business and Financial Times. So, Governor, just for clarity, what's the reasoning behind the additional policy, the CRR, and what will be the effect on inflation as well as on your operation with regards to OMO? Thank you.
Please, I'm Nette from CTFM Channel 1 TV. Governor, please, some economists in recent times have argued that there's a wide gap between inflation and the policy rate. And this gives the Bank of Ghana more room to ease the monetary policy rate. What's your position on it, and what reasons are you giving for that? Thank you.
Right, so we'll take the last question for this round. Yes.
James Ishen from Joy News. My question had to do with the banking space. Average lending rate are falling, but it appears businesses still say credit remains expensive. So the question now is, why is monetary policy transmission still a bit weak?
Why is monetary policy
Transmission a bit weak.
a bit weak?
Yes, please.
Can we get some more clarity? The statement he made before that.
Right, James. Yeah.
So when you speak to business, I mean, the last time we met, you made mention of the fact that banks are reaching out to businesses, but it appears it is mostly for the private sector and also the public sector. But it seems the informal sector is not really feeling this the fall with respect to interest. Yes, they are not really feeling that. So that is what I wanted to. And also a quick one before I go. The last time we met also, you made mention of the fact that there were two struggling banks, and you were considering an extension with respect to those banks. I think one of them, I need an update with respect to that.
Okay, so I'll start with the very last one on the, I wouldn't call them struggling banks. They are banks that are recapitalizing. Remember, the deadline was for December 2025, but then theirs was extended to March, and we have again extended it for the two of them till June 2025. So far, we are comfortable with the progress they have made, and we are confident that by the end of June 2025, those two banks, 2026, those two banks would also be fully recapitalized. Then, still coming from the bottom, there was a question about weak transmission to lending rates. That was what you asked about. Well, when the interest rates are falling, it may take a while. You know, remember the low interest regime we are having currently is quite new to the banks. It takes time for them to shift their portfolios, right? And so I can understand why you don't see the same speed of adjustment. Part of the feedback we got from some of the banks is that, look, you don't just rush into giving out loans. There has to be adequate bankable projects, right? You don't compromise your credit appraisal standards. And so eventually, we will see, lending rates picking up at close to the same speed. Once we engineer and we sustain the low interest environment, and it is realistic, we will see that full transmission. Then there was the third one. I guess that was about the real interest rate, right? The real policy rate. You're saying there's quite a gap still there, which suggests there's still room for easing. That is true. But remember, the committee evaluated other forms of risks. The elephant in the room here is the Middle East crisis. Up to this time, one is not sure whether it's a temporary crisis or whether it's going to be a long-lasting one. If we assume that it will be a longer lasting one, then you can imagine the impact on inflation expectations or the so-called second round effects. And so on the balance, the committee assessed the improvements in the fundamentals. It looked at not just the domestic economy, but also the headwinds that are coming from some of these global shocks. And that's why in the wisdom of the committee, it was decided to pause and to evaluate all these incoming data so that at the next MPC round, the committee would evaluate the issues again and take an appropriate decision. Then Joshua, you were asking the impact of OMO relating to the additional policy measure. So you'll remember just about a year ago, we took a similar policy measure where we separated the provisioning for the two types of deposit accounts. Down the road, a year after, the committee evaluated some of the incentives, some of the expected benefits for which those dynamic, structure of provisioning was put in place. We think that it's about time we reviewed that, considering the outcomes that we have observed. And in the wisdom of the committee, we think that this will go a long way to complement, our open market operations. Remember, our objective is to maintain an appropriate, policy stance, the so-called liquidity conditions. That's how we are able to impact on our transmission. And so in the wisdom of the committee, this additional measure was taken. We have provided clear dates by which the policy takes effect. And also remember, we meet the CEOs of banks immediately after MPC. So next week, we'll be meeting all CEOs of banks. We'll take them through the policy. We'll take them through the implication, and that should be good for the markets. Then Toma asked about why the Treasury bill oversubscription in the last couple of weeks. I thought you asked the finance minister first. It's a market. It's an auction. We don't just do allocations anyhow. The banks, the treasurers of banks, they make those decisions based on market conditions and what they forecast. The market to be like going forward. And so, yes, over subscriptions, the minister knows what they are doing. Remember what we do. Our OMOs are separate from those T-bill auctions. And so that is all I can say about it. It is good government is able to meet its PSBR at the end of the day. And it is good if the rates are not escalating while government does so. But for further inquiry, you may want to send some questionnaires to the finance ministry. I'm sure they'll be able to provide answers. That exhausts the first set of questions.
This is the 130th MPC Press Briefing, led by Governor Dr. Johnson Pandite Siama. The policy rate has been maintained at 14%. We are also live on Ghana Web. So we'll take the second round of questions. And as usual, for brevity, just keep it short. Thank you.
All right, Governor, my name is Norman Akwaheford. I report for Norman Report. I have two questions. Quick one. The net international reserves dropped from around 11 billion to about 10.98 thereabout. And I want to find out what accounted for this. Was it as a result of interventions that the bank took in April? And then also I want to find out from you, Cocoa Board plans to issue bonds and bills to the tune of about 11 billion. What are the timelines, if you know, and will this be listed as a commercial paper on the stock exchange? I want to find out from you. Thank you.
Right. My name is Nano Yankra. I work with Class FM. Governor, I would like to know what your outlook for the CD is for the next 2 quarters and how this will impact your policy decisions. Also, I would like to know which sectors are receiving the most lending and which ones are being crowded out. Thank you.
All right, thank you very much. My name is Nitrebi. I'm with the Finder newspaper. Governor, we know that inflation has declined significantly, even though it edged up a little bit in the last month. And we know there are improved reserves and also relatively tight monetary conditions. But the city continues to face some depreciation pressures, and we are told it's around 8.4% in the first 5 months of this year. What does the committee believe is currently driving exchange rate movements, and should the market expect additional policy measures aimed at stabilizing the currency?
Governor, my name is Belinda Anankwansa, and I'm with Wezo TV. Now, following report by the IMF's Monetary and Capital Market Department, prepared in collaboration with BOG, there are growing calls from policy analysts for the establishment of a dedicated Financial Stability Committee with a mandate similar to that of the standing of the MPC, focusing specifically on systematic risk in the financial sector. Given Ghana's recent experience with financial sector stress, including spillover effect of DDEP, do you believe the current institutional framework within the bank is sufficient to monitor and mitigate systematic risk, or is there merit in creating a formal standalone macro-prudential decision-making body in addition to the Financial Stability Council?
Thank you.
Right, so Belinda concludes this round of questions with a loaded one. Right, so, Mr. Governor.
Quite a loaded one indeed. So let me start with Belinda's question on the Financial Stability Committee. Yes, indeed. We've taken note of that recommendation, and the Bank of Ghana board at its next meeting will take a decision on that. But certainly, let me affirm that establishing that committee will go a long way to support our macro-prudential supervision. It's another toolkit that will help affairs, just as we have the Monetary Policy Committee that has been put in place. So yes, we are working in that direction. Then someone asked about CD depreciating, why so? First of all, we have always said it, that the framework we have is a managed float. It's not a fixed exchange rate regime. So the CD is expected to move, all right, on a daily basis. Expect the CD to move. It can depreciate, it can appreciate. Our concern is to avoid excessive volatility, right? So we haven't, announced that we are keeping a fixed exchange rate. It's okay for the CD to be flexible. Now, it is true, we've observed a surge in demand, an increase in demand in recent weeks. But remember the times we are in, the geopolitical, disturbances out there and its impact in terms of oil prices, trade disruptions here and there. What that means is the same volume of crude oil is costing about twice more by way of foreign exchange. So you can imagine why there's greater demand on FX, or therefore some depreciation pressure on the CD. Then remember the seasonal impacts as well. We are in the month of May, April, May. This is when banks and other companies, publish their accounts. This is when dividend payments are being made, to other countries. When those dividends are being sent out, they don't send cedis. They want to send US dollars. And it's the same demand, it's the same exchange rate that's to, take the impact. So it's not surprising at all. We are doing everything we can to stem excessive volatility. The good part of it all is that we have the buffers. We are building on a daily basis. At times you might see the buffers a little, deep. It doesn't mean anything has gone wrong. Remember, it's on a daily basis. Our trade account is improving, and so long as we have the buffers, so long as we continue to add, it doesn't matter. The CD, let it float, let it move. What we will ensure is that we won't see a return to the kind of volatility we saw in a number of years past. Right. And so if I can give you the NIR, yes, at 10.9 as of April. Currently, it is at 12.43 billion. So that's a clear increase. That's a clear increase. So we have the reserves, we have the buffers, and we should be able to do what we have to do. Then there was the next question about the outlook for the CD. I've just said it. We don't have a target for the CD. It is an endogenous variable. It's supposed to be flexible. What we do is to, avoid excessive volatility. But of course, in real terms, we're also interested in what happens to the CD in real terms to make sure that it is not persistently, overvalued. So the MPC, takes the pains to evaluate data on all these variables to make sure that we are very much aligned. And where we are currently, we believe that in real terms we are aligned. In nominal terms, the city is experiencing some volatility, but we think we have the buffers, and we do understand why those volatilities are coming in. Now, there was a question on sectors that are receiving the most credit. Well, commerce, continues to attract. But you should understand, commerce is an area that is very fluid. But that said, we are beginning credit, strong growth in private sector credit. And to the extent that this growth is sustained, all sectors, will benefit. Remember where we came from. There used to be, people, private sector, borrowing at over 30%. Currently, going by the GRR, you could borrow at about 10%. And so let's sustain the private sector credit growth going forward, and we are sure that all sectors will benefit. I'm sure you are aware of some of the other things we are doing, like the digital credit, policy that we are pushing ahead with. So very soon, it should be possible, no matter which sector you are involved in, you can just raise, a loan on your mobile phone. Not the type of loans, microcredit people took and never paid back. But this is going to be a well-administered framework. You can raise little sums to, do some things for yourselves. So it will filter through over time. Then I think that is all for the question on the CD depreciation. Did I answer Novan's question? Oh, that was on the NIR, yes. Yes. Yeah, so the Cocoa Board one, so it will be better you speak to Cocoa Board on these, right? Because we are not issuing that bond for them. All we have to do is to make sure the regulatory requirements are met, and that we are working on. But the actual timetable, volumes, rates, and things like that, please speak to Cocoa Board on that, Novan.
Right, thank you very much, Governor. Third round of, yes, please go ahead.
Good afternoon, Mr. Governor. My name is Morris with GTV. So, Governor, you have worked tirelessly to ensure, among many other things, that we enjoy low fuel price at the pump. I just want to know, regardless of how long the U.S.-Iran war lingers, are you able to assure us that we are still in safe hands, that you protect us? Thank you.
Assurance. Good afternoon, Governor. My name is Emmanuel Bruce, Reuters. I think you mentioned that there was a slowdown in our gold shipments in March and April as a result of the geopolitical tensions. I want to find out if shipments have resumed now, and what was the impact of this slowdown on the country. And then lastly, if any emerging new markets have emerged as a result of this crisis. Thank you.
All right. My name is Adnan Adams. I report for Economy Times newspaper. With our NPL ratios, which is a little below 20%, just wanted to know to what extent the domestic exchange, the debt exchange that happened some time ago, to what extent did it contribute to this, and what are we going to do to these commercial banks who do not follow through to the steps of cleaning their books of the high NPLs that currently we have in the banking sector. And looking at the non-interest banking, I think all is set for we to have, it being operationalized now. And as we are looking up to having the first license issued, how are we going to ensure the liquidity management and integrated into your system for supervisory activities and others? Thank you.
We can hear you. I mean, why won't we increase the policy rate? Okay. All right, so we can take that. Okay. So, Suleiman, maybe I should start with yours. I explained that the committee assesses a number of factors, right? Call them upside risks versus downside risk, right? In terms of the outlook. And it is about the balance, where the balance is tilted. And then that guides them as to whether to hike or whether to stay put or whether to reduce. At this MPC round, the committee was of the opinion that these risks, both to the upside and downside, are pretty balanced. And so they might as well stay for a while. At the next meeting of the MPC, they will evaluate, new data, and then if they have to hike, they will do so. If they have to stay put again, they will do so. If they have to, go back to the easing cycle, they will do so. So yes, the committee is very much aware of the factors going forward. They will continue to observe. Then there was a question on non-interest banking. That is something that is dear to my heart. We are all waiting to see the launch of the first non-interest banking, institution. A lot has been done. Professor Gachi is here. I'm sure you all know him. We give him a lot of credit for the work he has done. Hopefully this year we will see the first license. They are working very hard, putting in place the structures. The regulatory structures are very, very stringent, I can assure you. This is best practice. So have no fears about that at all. The necessary structures are being put in place to ensure that non-interest banking thrives and thrives well. The head of banking supervision is also involved, is right here. If you want to ask further questions after we end the press briefing, they will be here to give you further insights on that. Then there was a question on commercial banks, on MPLs. Yes, we have already issued a number of guidelines to commercial banks on these MPLs. The deadline is end of 2026. We expect that the rate will go down further. But note that the ratio we mentioned is the gross. That is without taking out the fully provisioned loans. When you take out the fully provisioned loans, the net MPL works up to around 8%, I'm told. So your question would be, why don't we just erase the fully provisioned loans? We don't just erase them because there's something called moral hazard. If you just erase them, you could be raising moral hazard issues out there. And so we still urge the commercial banks to pursue, the beneficiaries of those loans, and as much as possible to collect, even though they may have written off, fully those loans. They go after them and collect as much as they can. And there's a program in place. We are, working together with the banks to make sure we reduce that stock. Once we reduce them, we'll see even the gross MPL ratio declining significantly. So far, there's been a lot of progress made. We'll build on that. Then there was another question on MPL ratio below 20%. That's the same question. Okay, so we take it as answered. Then shipments of gold. Yes, the Middle East crisis for a while temporarily disrupted, trade from here between Ghana and the Middle East. Sorry, the UAE. But Gold Board has been able to find a way around it. They've been able to secure alternative trade destinations. And so as we speak, shipments are ongoing. They've deployed other strategies to be able to sustain gold exports. And if you want further detail, I believe Sami Jemfi is a media person. He loves to talk. Just file your questions to him. You get adequate answers from him. Then the first one was low fuel pumps, what we are doing. So the cost of fuel at the pumps, there are a number of variables that work into it. We are not in control of everything. The world market price is part. The exchange rate, yes, is part. But also some of the good things government has been doing by relaxing some of the margins, the built-in margins. All that have contributed, to the kind of prices we are paying at the ex-pumps. If you look at some of other countries and what is happening, I believe we are lucky that we still, are able to buy fuel at the prices that we are buying it. The question is, how long would that take? And you put it right, which again comes to the question I asked from the beginning. The geopolitical problems, in the Middle East, how long is this going to take? If it is temporary, yes, government can continue, to support citizens. We can also continue to sort of manage the exchange rate, and then you can continue enjoying those relatively low, prices. But if it's a permanent one, then I'm afraid, yes, we'll have to look at it again. So we are not in charge at all. We only do our part. It happens that it benefits fuel prices. Government is doing a large part, and then, of course, the global economy is doing their own. I believe that's the end of this set. That's the end. Hello. Thank you.
Thank you, Governor. Thanks for your time. Governor, I heard you say that you will be meeting CEO of banks post MPC to explain to them, call it how you arrived at this decision. If bankers who are industry players deserve such a treatment, what do you have for us who are not industry players? Can we also have a post MPC review like we used to? It used to exist, but it seemed to be scrapped. Thank you. We noticed that gross reserves grew to about 14.4 billion, and by May 18, from 13.9. What accounted for the jump? It doesn't seem that clear. And lastly, Governor, we have had 2 rounds of your 3I conference, yet the ECD seemed to be a mirage upon us. I know that it was on the cusp of being launched until certain financial crisis disrupted the whole process. Now we have resilience, we have stability. When is the ECD due? Because AI is seriously catching up on us. Thank you.
Hello, Governor. My name is Francis Into. I work with the Ghana News Agency. Considering what happened last year on BOG losses, what strategic options is the BOG considering to reduce its losses? And do you know any guess, perhaps the percentage that you are looking at to reducing your losses that you incurred last year?
Hello, Governor. My name is Caleb Zeblem from Joy News. I wanted to find out, you mentioned that dollars demand has gone up, but also on the supply side, has dollar supply reduced in the past few months? And if it has, is the BOG strategically using its reserves to support the markets as and when? Thank you.
Hello. Yes, Governor. Domestic debt continue to rise. My question is simple. Should we be worried?
Thank you very much, Governor. The name is Justice Shinwa News Agency. So you spoke about risk, and my question is a bit linked to what Francis asked. So going forward, what are the risks you envisage in your monetary policy operations, and what are going to be the trade-offs so that you could tell Ghanaians ahead of time that these are the risks that we encounter, especially in financial risks, but these are the trade-offs that would even show off at the end to ensure that the economy remains resilient. Secondly, also, when you spoke about the high demand for dollar, what are some of the sectors that are kind of inducing this high demand? Because some of the things we've heard is the contractors, for instance, some of them who don't need to import equipment because they can get it to rent here from plant pools, rather tend to import equipment unnecessarily when they receive government contracts. But are there other sectors like that that are putting pressure on the dollar? Then my third question is about the recently held 3i conference. I had an eye-opener. I saw a lot of informal, workers around. And I was thinking about the gig economy. Does the bank, have data on the nature of the gig economy in Ghana, its size and scope and its impact on the entire economy? Thank you.
Right. Justice, he took the opportunity to take all the other questions that I would have allowed to be asked. So on that note, I would say that this concludes this round of MPC in terms of the questions for the governor. Thank you very much. And Governor,
thank you. Thank you very much. So yes, if I can start again from the bottom, the 3i conference ended very well. We think that was another successful event. Remember our objective for the 3i conference, innovation, right? That is, in one word, what our objective was, innovation. A lot we learned a lot from our peers. They also learned from us. And it's all about how to deploy technology to deliver financial services, how to promote, financial inclusion through technology adoption, and then also how to use technology to support cross-border trade, for SMEs and other small businesses. And so to that extent, that was a very, very, no wonder you saw a lot of informal, you call them informal workers, people in the gig economy, people who are trying their hands on new things. That's exactly the focus, of such a conference. We want Ghana to become a center of learning when it comes to digital innovation. And I think that so far we are winning the awards. We go to other countries, we hear the accolades. Our aim is to sustain that. And so we are asking people who are interested in learning, please join our programs. This week, there's still some program running this week. Just move with us. It is good. We promote, learning in that area, and there's a whole lot to come. As for the data, you asked whether we have data on the gig economy. We don't have specific data as such, but we can give you some estimates based on certain parameters as to why we think it is important. And it's good you asked this question because about 2 months ago, I remember when my attention was drawn to the fact that there were some bloggers who were unable to receive their monies. Did you see that news item? And then we were told that the issue was persisting in the media. So I asked to meet with a cross-section of them. And we met them here with my directors. We were able to sort of identify where the problem was coming from, and we solved it. We suggested another channel through which they could be receiving their monies. But amazingly, you saw the kind of interpretation some people gave to that. But we are not perturbed at all. Whoever you are, once you're a Ghanaian, you're trying your hands on some of these things, you are earning foreign exchange. You deserve equal access, as I'll give to any exporter. So yes, we'll continue to support the gig economy, as you call them. Now, my friend Adobwe asked about the risk in the outlook. I think I've mentioned these when I was reading through the MPC statement. A number of risks in the outlook. The elephant in the room is the Middle East crisis. Make no mistake, that crisis, I keep asking people whether they think it will be temporary still or whether this will become a permanent feature. The answers I'm getting now is it's likely to persist for the next 24 months. If that happens, the question is, are we going to see oil prices above $120 dollars per barrel? If so, it has consequences, because changes in oil prices impact us directly. And so that continues to be an elephant in the room. It's a big risk in the outlook. But that said, the domestic economy is performing quite well. So we also have some, downward risks. It's a question of the balance going forward. And that is what the work of the MPC is about. At this round, this was what they decided on by a majority decision. At the next MPC round, based on new information that would have come in by then, by July, the MPC will do the reassessment again and then look at positioning of the policy once again. Now, there was Adobo again on high demand for the dollar, contractors, etc. You know what we do? Ours is FX auctions. As to what someone wants to use the FX for, that's their question. Once it is supported by relevant documentation, whether it's for equipment, whether it's for intermediate goods, you name them. Once it is supported by the appropriate documentation, your bank goes through the auction that we provide, and then the FX cover is provided. I've explained why we are seeing the surge in demand, the increase in demand currently. I've explained it. I also mentioned the seasonal, impacts. The fact that at around this time of the year, dividend payments, I don't want to mention some of the companies, it could be quite significant. And for some of them, we have to use alternative arrangements just to make sure that those lumpy demands don't impact on the market. So we are not surprised at all. We understand very well why the pressure is there right now. We are in the market, on a weekly basis. Every Tuesday, every Thursday, we are in the market. Our auction is still there. We've announced it, pre-announced it. The banks are aware. We continue doing what we are doing. If the situation in the Middle East suddenly abates and we see oil prices coming back to the $70 or $80 per barrel, certainly that will inure to the benefit of our local FX market. But for now, that is what we have. Remember, we have the buffers. The past is over. We have the buffers. We can manage where we need to manage. We are not intervening. We are rather building reserves. The auctions are a regular part of our intermediation efforts. Now, I have the head of financial markets right here. Those of you who would want some additional explanations, he'll be here. He's ready to explain to you what he does. So we are not intervening. We are still building reserves. I've given you the figures. But for now, the pressures are real, and we understand why they must be there at this time. Then if I go up again, somebody asked about domestic debt, whether we should be worried. So the answer is check what is happening to our debt sustainability. So long as our debt sustainability is not deteriorating, you can have some comfort. And then there are other parameters you can look at again. I provided some figures in the MPC statement you can refer to. And beyond that, you can also talk to the fiscal authorities, Ministry of Finance. They can give you an update on their fiscal programs. Then Caleb from Joy News, you were asking whether the dollar supply has reduced. No, as I mentioned, it's an auction. We pre-announce how much each month we will make available to the market. And for this month, I guess we made available about $1 billion. We are on track with that. We have not reduced our presence at all. The banks are aware of it, and there shouldn't be too much panic about that. Then Ohininto, you asked how will Bank of Ghana reduce its losses? Again, I'm sure you saw the Q&A that we published, the questions and answers. I believe you saw it, Caleb. It is still on our website. If you go to our website right now, you see the Q&As. That document explains the issue about losses, the so-called losses, and what it is. I urge you to scan through very, very well. We provided all the answers there. But your question is whether it will occur again this year. We don't think so, not to the extent what happened last year. Remember the three sources, and we made that clear. The fact that our revenue lines were impacted by the domestic debt exchange program took away a significant part of our revenues. The fact that we had this sharp appreciation of the cedi and the consequent revaluation losses. The fact that last year we started with inflation at elevated levels. Remember where it was at the beginning of the year. And therefore, the need for us to do some significant, almost open market operations to bring the rate down. Those were costly. And so putting all these pressures together, it wasn't surprising that we had to incur that amount of cost. From where we are currently, our almost will be less costly compared to last year. We don't see the cedi appreciating by another 41 or 42% this year. And so revaluation losses could actually become revaluation gains. So to that extent, losses or whatever you called it should not happen again. This morning I was telling someone, we published our financial statements on the 31st of December 2025. On that day, the cedi rate to the dollar was 10.4. Today, the cedi rate to the dollar is how much? 11.5. Now, if I publish the same financials today, the picture would have changed completely. It would have changed completely. So as at that date, that was what you saw, but as at today, it's a different story altogether. And we are saying that we are still policy solvent. We are not impaired in any way. We are capable of achieving our mandate as, instructed under the Bank of Ghana law. We are a very viable, institution. We are committed to deliver as required to the people of Ghana. And so have no fears at all. There'll be a turnaround certainly this year. But we believe, apart from these, the stability gains that we enjoyed last year, you cannot put money to it. It was significant. They called it a reset. What was achieved, at the so-called cost? We believe it was a necessary cost we needed to, incur last year to be able to engineer the stability that we achieved. What is important is for us to be able to hold the anchor going forward so that we preserve that stability upon which other growth outcomes will inure to our benefit. I still have about one more to go. Bernard? Yes, ECD. Oh, ECD, yes. ECD started some time ago. You remember that there was one pilot that was done in some corner of the country. However, considering how heterogeneous we are as a society, we need to do a couple other pilots, and then there are other preparatory requirements. Cybersecurity, for example, is a big part of that project. We are doing some work, to upgrade our resilience as far as cybersecurity is concerned. So we haven't abandoned that project, just that we want to spend more time on the preparatory requirements, the preparatory stages before we roll out. What is concerned to us currently and what we are focusing on is to see how we can deploy that for cross-border settlements And for that, we are talking with a number of other organizations, for example, the AFC, FTA, and others who are involved in these, how we can use stable coins, for example, to settle cross-border trade. In the interest of SMEs, in the interest of small businesses that may want to, scale up and take advantage of bigger markets across the border. So yes, the ECD project is very much, of interest to us. There are other related technologies we are supporting, like the tokenizations, the digitization, everything that is happening, as we explained during the 3I. So God willing, soon you will see the ECD project moving forward. And I believe that ends. Increase in gross reserves, we have provided that number to you. So you may refer to that. As I explained, that is our number one objective, to build reserves. And throughout last year up to now, that's exactly what we've been doing. We have an intermediation function, which is separate, right? So we build reserves, we intermediate some part of our FX, and I can tell you, we are not intervening as at this stage. All we do for now is to intermediate, in line with our intermediation budget, and we keep going. So, Bernard, I believe that covers all grounds.
Yes, that covers all grounds, Mr. Governor, but there's one, CEO of banks will be briefed by you. And
yes.
We wanted to know what happens to him.
Oh, yes.
But we've actually been engaging him for quite some time, so I was wondering why that question actually came up.
I'm sure he wants a greater level of engagement, but you assure him, for us, it's a lot. We do a lot of consultations. We meet different groups. Like I told you, I met the bloggers. I asked that they come here. We met different groups. In fact, yesterday, the Peasant Farmers Association, they were coming yesterday to see us. AGI, they come over. Give me more names. The academia, they come over. In fact, we want to introduce meetings with board chairmen of banks, because we meet the CEO. However, the board chairmen are the real, authorities when it comes to decision making at the banks. So that's another side segment we'll be introducing. So for journalists, we do. I believe this year we've had some very good meetings with journalists. We have some training programs with them as well. The head of communication, Bernard, is here. And maybe let me also emphasize this, that the Q&As that we prepare for these press briefings, we publish them. Bernard, right? You may want to explain that to them, that they will still have access to some of these prepared Q&As so that they are able to cover, their stories better. Yes.
Yes, ideally, Mr. Governor, that's exactly what we did before the start of this program, that the Q&As will be made available to you, as we always do, and that all the issues to do with the accounts, like what Into wasn't here when that meeting was held, actually. So you have the opportunity to have more information to what you requested for.
Okay.
So on that note, I would bring the Q&A to an end. We're live on Joy News, Channel 1, GNA, Northern Report, BNFT, and also on Ghana Web. As I indicated earlier, the governor is here supported by members of the Monetary Policy Committee and also his advisors. We have Dr. John Kwachi here with us. Professor John Gachi is also here with us. Mr. Franklin Belnier and Dr. Francis Kumar is all with us supporting the governor. But the biggest support comes from you yourselves as the media. Macroeconomic outcomes are best improved when you give the right information, devoid of misinformation and disinformation. So we expect you to go out there and give us the right report to build a better country, reset for all of us. Thank you very much, Mr. Governor.
Thank you very much. But Bernard, I think we should also add the fact that they are at liberty to file questions anytime. They can send questionnaires on anything, anytime, and we are happy to answer those for them.
Thank you, Governor. So on that note, please, can we rise to acknowledge the departure of the governor and his team? Thank you.